Hi everyone, I am going to get us started. Good morning and good afternoon. I see some people are still joining, but we have a packed webinar today. So just to quickly introduce myself, I'm Lauren Perlich. I work with Innovations for Poverty Action. Just a quick note that this webinar will be recorded, which you should be notified of at the start of the webinar. If you have any questions, please drop them into the Q&A function down at the bottom, and we'll try to answer all the questions that you send to us. And presenters can also answer those questions in the chat throughout the webinar if they feel comfortable doing so. So at this point, I would ask all of our presenters to turn on their videos so that I can pass it over to Ruth, who will do a quick introduction. Over to you, Ruth.
Good morning, good afternoon, good evening, and welcome to Inclusive Futures, Digital Financial Inclusion to Achieve the SDGs. I'm Ruth Goodwin-Groen, the Managing Director of the Better Than Cash Alliance, and I'll be your moderator for the next hour of our time together. Our goal is to inspire you with amazing examples of what's possible to accelerate the SDGs from leading policymakers and innovative researchers. It's incredible. So be ready for a great webinar. It's inspired by the publication that you can see on the slide here. The QR code is the link to the publication, and all of our partners are on the logos at the top. Thank you to an amazing partnership. Today, we've got new research and new policymakers, so it's you won't find it in the publication. It's for the first time you'll hear from these policymakers and researchers today. So I'm going to introduce all the speakers in the order that they'll be speaking, and then we'll get going. So we are going to start with Leora Klapper, who is the lead economist from the World Bank's Development Research Group. She's going to get us started. Then we're going to focus on SDG 5, and we're delighted to have with us Hinjat Shamil, who is the Senior Reform Advisor to the Minister of Finance of Ethiopia, and Emma Riley, who is an assistant professor of economics at the University of Michigan. Her research from Uganda will be shared today. For SDG 8, we have Ahmad, who is the head of financial inclusion for the Central Bank of Jordan. And both Ethiopia and Jordan and Mexico later are all members of the Better Than Cash Alliance. So we're delighted to have them with us. And Sean Higgins will also speak about his research in Chile. He's assistant professor of finance from Northwestern University. And there's a whole team from Chile he's representing. For SDG 13 on climate action, we are delighted to have Camila Zepeda with us, who is Mexico's it's a long title. Mexico's chief climate and biodiversity negotiator. So it's great to have Camila with us today. And the researchers that are sharing their research on SDG 13 are from Ghana, Flavio Malagutti, the University of California in Santa Barbara, and Edward Tsinigo from Innovations for Poverty Action in Ghana. And last but by no means least, our colleagues from the CEO, Rajesh Bansal, from the Reserve Bank of India's Innovation Hub. So you can see we have an amazing lineup today. And so I'm not going to waste any more time in introductions. I'm going to ask Leora to get us started.
Thank you, Ruth. Let me share my screen. Okay, so thank you. The United Nations Sustainable Development Goals were adopted by the UN in September 2015. Scanning these 17 SDGs, you'll see inclusive growth, clean energy, and climate action, among other crucial objectives. But you won't see the role of financial inclusion and the role it can play to attain many SDGs, such as giving people access to saving accounts, digital payments, loans, insurance, and other financial services. Yet achieving the SDGs by 2030 will be tougher without bringing people into the banking system. There's growing evidence reviewed in our SDG compendium that digital financial services can reduce poverty, create jobs, improve gender equality, increase spending on healthcare and education, and more. For instance, money in a savings account allows parents to pay for a clinic appointment for their kids. A study in Kenya found that giving people a safe place to store money increased health spending by 66%. The good news is that according to the Global Findex database, account ownership continues to grow. In developing countries, account ownership increased over 30 percentage points in the past decade to 71%. Account ownership is a fundamental measure of financial inclusion and the gateway to using financial services in a way that promotes development. Owners of formal accounts, whether those accounts with a bank or other regulated institutions such as an MFI or mobile money service, are able to store, send, and receive money that research shows can enable account holders to invest in health, education, and businesses. This is reason to celebrate. But to achieve the benefits of financial inclusion, it's also critical to remember that we need to ensure that new and inexperienced customers can safely and confidently use digital financial services and prevent fraud attempts, avoid hidden fees and charges when they make digital payments. A key aspect of financial inclusion is ongoing financial education and support to improve digital and financial literacy skills, in addition to product design that considers customer abilities and strong consumer safeguards to ensure that customers benefit from financial access. There are a number of channels through which financial inclusion can help achieve development goals. Saving accounts make it easier to save. People save more, invest more, and earn more, which can help lift them out of poverty and achieve SDG 1. Women in Nepal who were offered a simple bank account increased their total assets by 16%. In India, a government effort to open banks in rural areas helped cut rural poverty by up to 17 percentage points. Digital financial products, such as a mobile money account, also allow people to get money from far-flung relatives and friends in a crisis, reducing the odds that they'll fall into poverty. A study of Kenya's mobile money platform, M-Pesa, showed that users are more likely to receive a remittance when hit with a financial shock, like a job loss. Digitizing payments, like utility payments and merchant payments, can also help people, including entrepreneurs, build financial histories that can be used to access credit. Increasing account ownership can also promote gender equality, SDG number 5. There's evidence showing how digital payments offer women greater security, privacy, and control over her money. Consider that women account for nearly 1 billion of unbanked adults, or most of the financially excluded. When basic accounts were offered to female market vendors in Kenya, they invested more in their businesses, and their daily expenditures increased by 37%, relative to a comparable group of women who did not receive an account. They also spent 13% more in food for their families. There's also growing evidence that digitizing wage payments, for example, is cheaper and more convenient for employers and can save production time lost doling out cash wages. It's also better for workers, and both can support achieving SDG 8. Our research finds that workers receiving auto deposit of their wages more than double their savings, are more likely to send money home directly from their phone without the help of an agent, and over time learn to become savvier financial customers as compared to workers paid in cash. And finally, climate events have surged in the past decade, and low-income people often feel the brunt of the impact because of their higher exposure to climate events, greater vulnerability to negative impacts, and fewer resources to rebuild and recover losses quickly. Many people who face higher exposure to climate-related natural disasters also tend to rely on agriculture as a primary source of income, creating a double hit of loss of assets and loss of labor productivity and income when a natural disaster strikes. Financial inclusion can support the urgent need for progress towards SDG 13. Research has shown the importance of digital financial channels to nudge formal savings, help people build payment histories to access appropriate credit products, and deliver insurance products. Financial markets also have a role in helping people invest in more climate-resilient homes, greener electrification, and more. Given the link between financial inclusion and development, governments should keep pushing for more access to and responsible use of financial services. The evidence that's been gathered in our report builds a strong case that financial inclusion can help create the conditions that might bring many of the SDGs within reach. I look forward to hearing more from our presenters. Thank you.
Thank you so much for that great overview, Leora. And please do go to the publication that Leora was referencing. Now I have the pleasure of handing over to Hinjat Shamil, who is the Senior Reform Advisor to the Minister of Finance in Ethiopia. And she will be focusing on SDG 5, on reaching gender equality. So over to you, Hinjat. And Lauren is just about to pull up the slides.
Thank you so much, Ruth. Thank you, everyone. Thank you for having me. Good morning, good afternoon. Can you see my slides clearly?
Yes, you can. You might want to go onto full screen. That would be even easier.
All right. Good. Thank you so much. I thank Better Than Cash Alliance for inviting me to briefly share Ethiopia's journey towards ensuring gender equality, and particularly how we are leveraging digital finance to achieve SDGs 5. I would start my presentation with briefly depicting where Ethiopia is in terms of its gender equality journey. In this slide, I have some data from the Global Gender Gap Index ranking for Ethiopia showing 2017 and 2023. So if you look at the upper bar, you see that the overall country ranking for Ethiopia has significantly improved from 2017 to 2023. We have moved, I think, close to 50 points from 124 out of 146 countries to 75 in 2023. I think this is a significant lift. Political empowerment is also one of our strongest areas. In the past 5 years, we have moved from a ranking of 44 to 25th out of 146 countries. Education, economic opportunity are a few of the areas we're lagging behind, but we're also focusing and working more on. When we look at economic opportunity, we also recognize that there is a significant link between economic opportunity for women and then financial inclusion. For that, we've been working in a much concerted approach for the past 3 years. I would like to highlight a few of the measures we have undertaken. I think we have set a strong policy and strategic foundations. To mention a few, we launched our first Digital Ethiopia 2025 strategy in 2020, which lays out Ethiopia's digital economy potential and identifies paths to achieve those. We refreshed our 2014 National Financial Inclusion Strategy in 2029. Again, this was refreshed with the aim of allowing us to incorporate a gender perspective in the financial inclusion journey, as well as leverage digital financial tools, which we have not really taken into much attention in 2014. We also launched our National Digital Payment Strategy in 2021, which is critical in terms of digitalizing the financial sector. We now have a National Financial Inclusion Council, which is led by the Minister of Finance, which provides us a whole of government approach to advocate for and then guide our financial inclusion measures. In all of this policy and strategic efforts, we have identified the gender gap, and we continue to incorporate gender-specific strategies. We're also working on the digital infrastructure aspect, which is a significant gap. But however, in the past 3 years, we've taken significant investments and measures. The first one being we liberalized the telecom sector after close to 100 years of monopoly by the government and a single telecom operator. That also allowed us to liberalize the mobile money services. Following that, we were able to attract one of the renowned international telecom operators, Safaricom, backed by Vodacom. So in 2021, we launched our first mobile money services. This year, just 2 months back, Safaricom brought in one of its renowned mobile money platforms, M-Pesa, and launched services in Ethiopia. I think this is a significant achievement in terms of laying down the basic infrastructure for digital access and finance in Ethiopia. We're also working on ensuring digitalization of payments. So from the government side, we have almost digitalized all government payments, including G2G, G2 businesses and citizens. Just to give an example, in terms of public sector wage, that allows us to cover upwards of 2.5 million people. We're also digitalizing social protection schemes, which allows us to bring in close to 8 million to 10 million individuals into the digital payment sphere. Where have this led us? I think we're seeing we're seeing some of the fruits of our work recently. Just to highlight some of what I call the early but promising wins. Financial inclusion has increased from 35% to 46% in 2022. Mobile money subscription has reached 60 million now, which is a big leap, and noting that we just had our first mobile money platform in 2021, and women's mobile money access is also increasing. Sorry, I'm unable to move my slides. All right, yeah. So just on a final one, what are some of the challenges we identified in the past 3 years in our journey to financial inclusion? Is access to ID has been one of the challenges in accessing financial services. 29% of the adult population without an account mentions lack of documentation as a challenge. And this is fair, noting that only 64% of the population has an ID. We're also noting that gender gap in financial institution accounts has increased. But that means while financial inclusion is improving broadly, but the gender gap has increased. It has increased from 2 percentage points in 2014 to 17 percentage points in 2022. Both of these gaps further encourage us to look at digital financial inclusion tools and leverage digital finance. What are we looking at currently and what are we working on is we recently launched our first national digital ID, which is covering 3 million individuals in the past since its launch in 3 months, and we're looking to cover 90 million. By 2025, we're seeing an encouraging a lower gender gap in mobile money accounts when compared to financial institution accounts. The gender gap is only 1 percentage points compared to the 17% in terms of financial institution accounts. We're also launching our first national digital and financial literacy survey just to give us further understanding of what are the gaps and how we can actually further advance financial inclusion. Focusing on data, again, we're looking at automating the central bank's data, focusing on disaggregated data, and then as well as cascading it to the local level. Finally, we're also piloting payments in the agriculture sector, which I strongly believe would allow us to bring in more women into the digital financial sphere than we have done in any other sector. Thank you so much, everyone. I look forward to connecting more.
Thank you so much, Hinjat. And there's a great connection between that, your point about the very, very small gender gap in mobile accounts and Emma's upcoming presentation. Emma, do tell us what you found in Uganda. I think you're still on mute. Great.
Thank you very much, Ruth, and thank you for letting me take part in this webinar. So my research in Uganda looks at how digital financial services can economically empower women. Microfinance loans are widely used as a tool to try to economically empower women by providing them with the funds to start a small enterprise. And they're extremely popular worldwide, with hundreds of millions of microfinance loans given predominantly to women. However, there's evidence that women often struggle to retain control over these microfinance loans, with other household members or family instead taking the funds from them. So in my research, I look at whether digital accounts and changing the format that a microfinance loan is given in from the usual method of giving it as cash and instead to providing the microfinance loan on a private digital account in the woman's name that she controls can actually increase her control over the microfinance loan, and whether as a result this has impacts on her business and also her household. So in order to do this, I run a large-scale field experiment with 3,000 female microfinance clients in Uganda. These were predominantly from the Kampala area, but represented a range of businesses from sort of market stalls to some farming activities as well. And I randomly assign these 3,000 women, 1,000 to remain receiving their microfinance loan as cash in the usual manner that it was given in, 1,000 to receive their loan still as cash, but also to get a mobile money account in their name, and 1,000 women to now receive their loan in a digital manner on this new mobile money account that I give them. So I have 3 main findings. Firstly, that dispersing the loan on a digital financial account increased women's financial control over the loan. So I see that women who receive the loan on the mobile money account store the loan on the account for a period of time, and they're able to draw it down as they need it for their business over time. In the interim, any part of the loan that they want to keep to use later is protected on the account. It's not visible to other family members, and so the woman retains control over that money until she needs it. I see as a result that more of the loan is invested in the women's business. Women who receive the loan on a mobile money account have 11% higher levels of business capital. And I see that the effects are largest for women who had the lowest financial control prior to the study, so who experienced the most pressure to share money with other family members. And this shows how digital financial services can help to achieve SDG 5 by raising women's financial control. My second finding is that increasing women's financial control also increased their incomes. So women who receive the loan on a mobile money account instead of as cash have more profitable businesses. In fact, their businesses make 15% higher profits every single month. So it's a big increase. And indeed, the increase was even larger for the women who were most subject to pressure in their household to share money with others, who had the least financial control at the start of the study. These women see a 25% increase in their monthly business profits just from having the loan disbursed on a mobile money account instead of given as cash. So this shows how digital financial services can help us achieve SDG 5 by raising women's incomes and increasing their income generating ability. Lastly, my study showed that the increase in income for the woman also increased her welfare. At the household level, I see that the woman's household income was higher, that mirrored the increase in the woman's business profits. And also then the household consumption was higher. The household was able to spend more on food and children's education in particular. I see that women made more decisions in the household. This is often used as a measure of women's empowerment, so that also increased. And women report improved well-being and reduced stress about their finances. So this highlights that digital financial services can help us to achieve SDG 5 by raising women's empowerment, improving their household welfare, and generally raising their well-being. So thank you very much for listening. Thank you to all the study participants, some of whom you can see on the right there. And here's my contact information if you'd like to reach out.
Fantastic research there for increasing gender equality and the relationship of financial inclusion, women having accounts in their own name that they can manage. I love those numbers of 15% higher monthly for everyone and 25% for women who didn't have so much control to start with. So those kind of profit numbers are very compelling. Thank you. And thank you so much to Hinjat. The progress on Ethiopia is phenomenal. And thank you for sharing your journey. And we will obviously keep tracking how that progress goes. And there are questions coming in the chat that we'll have a chance to respond to later for both of you. So very inspiring. Thank you. So now we're going to SDG 8, decent work and economic growth, and over to Ahmad, who is the head of financial inclusion at the Central Bank of Jordan. Ahmad.
Hello, Ruth. Thank you very much for having me. Today, I'll talk about the Central Bank of Jordan and what we have done in terms of contributing to SDG 8 by digitizing and providing digital financial services and digital financial inclusion. First of all, we worked on the. Is my slide clear?
Yes,
Hello?
sir.
So, yeah, I can't see them, but I just want to make sure.
You might want to put it on full screen. That might help.
Yep.
But if not, just keep going. You'll be fine.
Okay, so first, the first financial inclusion strategy, we worked on expanding access to digital financial services. We have in 2019 we worked hard as product of the first national financial inclusion strategy. We developed the basic bank account and used digital wallets, payment service providers as well, and expanded agent network to provide access to open wallets, particularly to digitize social government to people, government social benefit payments to people. And then, as you know, COVID-19 hit, so it was mandatory to go fully digitized. We took a gradual approach at the beginning to cover as much geographic areas as possible, but due to the pandemic, we had to cover and digitize all emergency payments, in addition to more than 50,000 households that beneficiaries of the National Aid Fund. And in terms of households, the digital wallets as well were helpful in delivering emergency payments to refugees as well, where 98% of UNHCR beneficiaries households received their payments digitally. Afterwards, what the impact that we have seen, first of all, access to formal financial services that increase particularly access to services like credit, savings, credit, and other financial services, and promoting financial inclusion. Then strengthening decent work, particularly in timely payments, where digital systems ensure beneficiaries receive their payments promptly and consistently, supporting income stability and decent work, and reduced leakages, where reduced risks of fraud and ensured that payments will receive to intended recipient, to contributing to fair labor practices. Economic growth as well, where simultaneously Central Bank of Jordan issued regulations to regulate instructions to regulate finance from non-bank institutions, including crowdfunding, leasing companies, and whatsoever. So that created opportunities for MSMEs, access to finance within, given the digitized new entrant to the market. In addition to data-driven policymaking, that as we are currently working on our national financial inclusion strategy, the second one, it improves targeting and looking at spending patterns and enabling us to target policies to different geographic areas, and definitely alternative scoring for access to finance. Besides resilience and crisis response, as we said, 98% of refugees in Jordan have received their aid through digital wallets, which gave us this flexibility and resiliency in terms of reaching out to the needed at the time relevant. On the other hand, we've been working on digitizing wages. We particularly worked on the garment sector and education. We took the sectorial approach. In the garment sector, we've realized that in terms of contributing to SDG 8, the timely payments, digitizing salaries, ensure that they receive their wages promptly and consistently, which supports income stability and decent work, plus enhanced oversight. In terms of teachers, we've observed issues in terms of corruption and theft. We mandated digitizing of salary in education sector, and in order to license schools as well, so that reduced theft and whatsoever. And it provided more intuition for users in terms of strengthening decent work and digital pay slips, where people knew more about their spending behavior and secured their transactions. Again, financial inclusion, we've seen increasing at that we've launched or published our 2022 diagnostic study, where it shows growth of usage of digital financial services and MSMEs financing as well. For the way forward, the central bank currently is working on developing the second national financial inclusion strategy. This time we're focusing more on quality of digital and usage of digital financial services for an access to all financial institutions. The plan is to increase the number currently from 43% to 65%, narrowing the gender gap from 22 to 11%, which resonates with SDG 5, and promote adoption of digital financial services for Jordanians from 38% to 80%, all targeted to be achieved by 2027. Thank you.
Fantastic. Thank you so much, Amr. And you've got 6 benefits on the SDG on economic growth, and 4 benefits on digitizing wages for both the economic growth and the decent work. So thank you so much for that presentation. Now, Sean, over to you and your team on the really interesting work you've been doing in Chile.
Great. Thanks so much for having me in this fantastic event. This project is on government guaranteed loans and how they enable firms to maintain jobs during cash flow shocks. And this project is joint work with a team of researchers. So the project's in Chile, and it's a collaborative effort with researchers at UC Berkeley, the Universidad de Chile, and the Inter-American Development Bank. And we also have a large team of collaborators on related projects and research support. And of course, want to thank our funders. So the theory of change that we had in mind behind this project is that the COVID-19 pandemic led governments to impose lockdowns in order to control the pandemic and protect public health. These lockdowns led to a reduced demand for goods and services, which led to a cash flow shock for firms as they experienced a decrease in revenue. From the bank's perspective, this shock to firm cash flows creates additional risk for the bank when it's thinking about making loans to firms. And on top of that, the pandemic itself just generated some general macroeconomic uncertainty that created additional risk for these banks. And so the combination of these 2 forms of increased risk led these banks to not lend to a number of firms that they might have lent to in normal times. So from the firm's perspective, this reduction in their cash flows and their inability to get a loan from a bank would lead them to be unable to pay all their workers and to end up having to fire or furlough workers to survive the shock. Now, a number of countries implemented a policy where the government partially guaranteed bank loans to firms. And so once they did that, the banks, from the bank's perspective, it was now less risky to lend to these firms. So they would end up lending to firms, and this would allow them to maintain those jobs that they would have otherwise not been able to maintain if they didn't have access to loans. So in this project, we're focusing on the Chilean government's expansion of their government guaranteed loan program for small and medium enterprises, or SMEs, which they started in June 2020. This program existed before COVID, but it was greatly expanded during COVID. So during COVID, they lent out they provided 14 billion in support through government guaranteed loans compared to an annual average of $1 billion in non-crisis years. The way these loans work is that 75 to 80% of the loan made by the bank is guaranteed by the government. So that reduces the risk faced by the bank. The banks can charge a maximum of 7.7% annual interest rate. And 145 countries implemented something similar, some form of similar loan policy during COVID. So we partnered with the Chilean bank Banco de Crédito e Inversiones, or BCI, to offer loans to SMEs who had previously applied for loans but been rejected. So the government wanted these loans to be targeted to those riskier firms who wouldn't otherwise get loans without this government support. And so they imposed a restriction that the loans had to go to risky firms. One way that you could define a risky firm under the policy was that it was a firm that previously applied for a loan during COVID from that bank, but was rejected because they were too risky. So due to limited funds, the BCI could not offer loans to all the newly eligible firms. And so we worked with them to randomize loan offers to half of about 10,000 small and medium enterprises. And these SMEs had between 1 and 110 employees. The median was 3, so these are relatively small firms. So the first thing that I want to show you is that before getting to the results of the experiment is that COVID-19 and lockdowns did reduce SME revenues. So here I'm showing you a graph using data we obtained from 6 banks across 6 countries in Latin America. And what you can see is that when COVID started, you see a big reduction in the revenues that these firms are getting as measured by various types of deposits into their bank account. And so you see a big reduction in firm revenues due to COVID-19. And then I'm not showing this in the graph, but we use variation in Chile across neighborhoods over time in terms of whether those neighborhoods were in lockdown or not, and find that lockdowns further reduced revenues for these SMEs. So the main result from the experiment was that loans led SMEs to maintain jobs during the lockdown. So you can see that here in this graph, first comparing the gray bar to the gold bar. When firms were not in lockdown, they were able to maintain the same number of employees, regardless of whether they had access to a loan from being in our treatment group. But when in lockdown, if you compare the blue bar and the gray bar, firms without access to the loan ended up having to fire or furlough about 0.2 employees on average. That's why you see a lower value for that blue bar. Whereas for firms with access to the loan, because they were in the treatment group, when in lockdown, they were able to maintain the same number of employees as if they were not in lockdown. And so that means that this policy enabled SMEs to save jobs, which contributes to SDG 8. Thank you.
I'm sure there'll be lots of questions for you about that research, Sean. Thank you so much for sharing that, because there's going to be lessons for other governments that not just COVID situation. So, and thank you to Amr for the great work that you've done, also sharing on your progress in Jordan and the results that you found. It's my great pleasure now to hand over to Camila Zepeda, who, as you know, is Mexico's Chief Climate and Biodiversity Negotiator, to talk about SDG 13. So over to you, Camila.
Thank you very much, Ruth. And we've seen now that the digital financial inclusion has helped achieve SDGs, and then it's also true for climate action. And we see that both in mitigation and adaptation, and then to address the loss and damages of extreme weather events. So in mitigation, we see that sort of the shift from cash-based transactions to digital payments has the potential to reduce the environmental impact associated with the production, transportation, and disposal of physical currency. And particularly when we're talking, as Mexico is a large country with very remote areas. Sorry?
Could I just interrupt you for 1 minute? Rajesh, could you go off video just until we get to you? That would be, it accidentally came on. Thank you so much. Camila, sorry for interrupting you. Back to you.
Okay, so talking about mitigation, was explaining that, for example, in Mexico, we have a very large country where accessing bank offices and ATMs is very intensive in carbon footprint. So going through a cashless society definitely helps mitigate a lot of emissions. And in that sense, we have been promoting a digital payment platform to make sure that individual businesses can make digital payments using QR codes, reducing the use of cash, and that's it helps all of the resource-intensive production and transportation. Then on adaptation, we do believe that we need to move toward a more resilient businesses, and that's important for us to empower sustainable entrepreneurs. In Mexico, most of our economy is informal economy or small and medium enterprises. And in order to promote sustainable practices and benefit from these digital financial services, we have provided green incentives. So there's specifically programs for microfinances, rural banking, and more specifically for green financing programs to offer specifically loans and credits facilities to entrepreneurs, small and medium and also size enterprises to engage in eco-friendly projects. We have also done quite a few rounds of loans on terms of making sure that they are resilient and that they are adapting to climate change. And so that's something that we are promoting coming into the digital system. And finally, it's just when we're talking about extreme weather events, Mexico is a very prone country and vulnerable country to disasters, to droughts, to hurricanes, and it's quite a concern when particularly populations in vulnerable areas that are marginalized, that rely on cash, then in one set of these natural disasters, they lose all of their wealth, they lose all of their cash, they lose all of their possessions. And that's when having access to digital financial inclusion is of extreme importance to make sure that they can react to those events and better cope with these events. So we are promoting in that sense, making sure that we reach to those very vulnerable areas, that there is financial literacy programs and in environmental education programs to empower individuals to make informed choices about sustainable investments and financial decisions, and make sure that they not only rely on cash, but that they have access to these digital platforms, and so that they do not lose all of their assets when an extreme event occurs. So definitely it's worth investing in financial literacy and education linked also to environmental education, and promoting all of the right incentives that we would need for those populations that don't necessarily have access to it. And it has been proven to be very challenging, particularly in those very remote areas that do not necessarily even have internet connection. So we go into a broader impact that we need to make sure not only that we are providing the digital inclusion, that we are providing the financial literacy, but that we're also providing access to internet in those rural areas to make sure that they can then take advantage of this new digital platform. So it is a powerful tool, but still it needs to consider all of the inequality gaps existent to make sure that we can prevent and make a good use of these new technologies. That's all on our part. Thank you very much.
Camila, it's great to hear how you brought in the mitigation side as well as the adaptation and resilience side of the climate change agenda for achieving SDG 13. And thank you for reminding us all about the challenges of inequality, which is in access to in the digital space as well. I'm sure there'll be lots of questions for you, but let me go without further ado to our researchers who have been working on the adaptation side. So, and as well as on mitigation. Wait, Flavio, I think I should just hand over to you straight away.
Thank you so much for having us and allowing us to present today. I'm sharing my screen right now, and my colleague Edward would be the one kicking us off. Edward, whenever you're ready.
Okay, thank you, Flavio. So we'll be talking to you today on gas pay, linking LPG consumers and suppliers to better health and environmental outcomes. Okay, next slide. So globally, about 3 billion people still use biomass to cook in inefficient and highly polluting stoves, posing global environmental and health risk. The use of biomass causes significant damage to human health, especially for women and girls who are most commonly exposed to such domestic tasks. Yet, households face two main barriers to the adoption of clean energy sources such as LPG. First is a geographical barrier related to access to clean fuel, such as non-availability of filling stations or distance to the filling stations in most communities. Second is a financial barrier, such as the cost of LPG, the cost of the cylinder, and the fact that consumers have to purchase LPG in larger amounts. These barriers limit most households using these energy sources from transitioning to clean energy sources. The development and promotion of digital finance can help overcome these barriers and smoothen households' transition to clean energy use. I will now hand over to my colleague Flavio. Thank you.
Thank you, Edward, and that's great. So then it was exactly by finding out and thinking about these barriers that we are in our research group decided to investigate whether digital finance can help lift those barriers that are currently holding back households to using to go through those clean energy transitions in Ghana. And what we are developing is what we're calling gas pay. Gas pay is an LPG, a specific digital marketplace that we're developing with Zipay, a mobile money company that operates in Ghana. And as a marketplace, GasPay is really interesting because it incorporates both demand and supply sides of the market to hopefully alleviate or lower the barriers that we are finding that households experience. So what GasPay does is on the demand side, consumers use digital mobile finance with their phones. On the supply side, the LPG marketing companies have a platform for them to use and see what demand is looking like. And then within the demand side, we can think about several different types of incentives to again break those barriers that we're identifying, including an earmarked mobile wallet that is specific for LPG. We can, in that wallet, add benefits for households to save for LPG, for households to continue purchasing LPG. We can add credit to complement purchases, and we can also incorporate target subsidies for specific groups that we may want to incentivize clean energy, such as, for example, pregnant women or large households or those households that are primary charcoal users. On the supply side, by having customers using the marketplace, this digital platform, suppliers can know the location of their customers and then target deliveries, which is something that is in high demand. They can also run promotions and advertisements, and hopefully by having this platform out in the world, increase the number of customers that are using LPG and transitioning from charcoal and firewood to LPG, which is the cleaner alternative for fuel. So we did some initial market research together with IPA. We did focus group discussions with charcoal and LPG users. We also did a survey with 100 households in Accra, the capital of Ghana, where we were bringing up the idea of a service like this and asking people what they think would be helpful for them, what they think wouldn't perhaps be so helpful, mostly to validate our intuition and make sure that we're walking on the right direction with this idea of bringing digital finance to the energy space. And so far, the responses that we've gotten were quite motivating, and they were in the direction of our intuition. So a lot of households said that delivery services would be something that is would be interesting for them. That speaks to the access gap, the access barrier that Edward presented. And they also mentioned that loyalty programs such as you buy 3 get 4 or something like these would be something that people would be interested in using, and they think would be helpful for them. So our next steps now is that we're developing what people in the tech space call a minimum viable product that is to be ready in 2 months. So we're going to be doing pilot tests with this project thereafter, and we're still tying up relationships with supply side to bring more companies into this marketplace to see if it really can thrive out in the real world. And yeah, that's what we have today. And please reach out if you have ideas for collaborations or anything else. Thank you.
Thank you so much, Edward and Flavio. And being able to address the 2 big barriers to clean energy use, both proximity, access, and price, is it's very innovative. So hopefully you'll have great success in the way that that's implemented. And so
thank you.
SDG 13, very inspirational from Mexico and Ghana. Thank you so much. And so I'm going to give India, our colleague from the CEO of the Reserve Bank of India Innovation Hub, an opportunity to put all these different SDGs together in terms of India's journey on digital financial inclusion. Over to you, Rajesh.
Thank you so much, Ruth, and interesting conversations. I wish we get more chance to work with most of you, including some research. So just to give a context, Reserve Bank Innovation is a company fully owned by the central bank, and the mission is enable frictionless finance for 1 billion Indians. And we are indirectly or directly contributing to SDG 1, 5, 8, and 10. And I'll be a bit specific when I talk about SDGs 1, 8, and 10. As you are aware that India has leveraged the DPI to make a difference in digital financial services, to ensuring that money reaches in the bank accounts of hundreds of millions of people. We at the Reserve Bank Innovation Hub are focusing on key customer segments which includes farmers, 120 million small and marginal farmers, 80 million dairy farmers, and then women, especially informal women entrepreneurs and dairy farmers, which are predominantly women in India. So our approach is a very customer-centric approach. We keep the customer at the center of innovation and design products and processes. And in that, what we have managed to achieve in the last 1 year or so is that for a dairy farmer or a farmer, it used to take 4 to 6 weeks to get a loan. And now, because of our interventions, our new design, our technology blueprint that we have developed with the banks, it takes just a few minutes to get that loan. Pilot has been started with 6 banks, so we are trying to directly and indirectly contribute to that. And 2 weeks back, we have launched a middleware called Public Tech Platform for Frictionless Credit. It was announced by the Governor RBI. We are going to look at not just dairy farmers, at small and marginal farmers, also look at micro enterprises, personal loans, basically targeting the next $500 billion. How do we make it digital and make it frictionless in a way? Coming to SDG 5, especially on gender, we have a huge program called Sonari. Sonari in Hindi, in English, is basically independent or self-reliant women, where we are trying to specifically work on gender intentional products and processes with the help of banks and other fintechs, and trying to see what we can do. In particular, our focus areas is dairy farmers. As I said, there are 80 million dairy farmers in India, of which 70% are women, women street vendors, MSMEs, and self-help groups, to say the least. We are working towards frictionless finance for them. And we are also introducing incentives in form of running a prize. And in February, we'll do an event which looks at gender intentional financial product being offered. So we are committed to furthering India's journey in achieving SDGs by 2030. And we look forward to partnership from all of you. With this, thank you, Ruth.
With such an ambitious goal, you've achieved so much in the last 5 years. I have no doubt that you will get close to achieving your goals. Thank you so much for that inspirational closing remarks, Rajesh. We have gone across the world. We've got South Asia, Middle East, Africa, and Latin America. Amazing policymakers, inspiring in their journeys towards using digital financial inclusion to achieve the SDGs. And love the researchers for their very specific contribution to helping us understand exactly how digital financial inclusion contributes to each of those SDGs. And we've had lots of questions coming in, so we're just going to answer a few in the last few minutes of the webinar. But if you put them on the chat, we will aim to get back to you. And if you want a direct response, please put your email in there. So Hinjat, there was a question for you about rural payments. Can you help us understand how digitizing ag payments, particularly in rural areas, is very important for SDG 5 on gender equality?
Sure, thank you, Ruth, and everyone. So for us, agriculture is prioritized, particularly because it still employs close to 70 or more % of the population. And it's also estimated that 50% of women are employed in agriculture. So, digitalizing the Ethiopian economy or transforming the Ethiopian economy cannot happen without doing so in the agriculture sector. So what this allows us to do is primarily to bring in those women who are in the agriculture sector to bring them on board to the formal financial sector or to the digital sphere by allowing them to access by allowing them to provide their goods and get their payments via digital tools, right? 2 is it also allows us to cut this long chain of intermediaries in the agriculture sector from the producer to the consumer, which is a significant hurdle for most farmers to get the value of their work and their products.
So wish you every success in that journey, Hinjat. It's clearly very important for gender equality in the Ethiopian economy. Thank you. We also have a question for Sean on your research. So it was COVID specific. And what can policymakers learn from non-COVID situations from your research?
Thanks so much for the question. I think our results suggest that government guaranteed loan programs like the one we looked at in our research could help firms maintain jobs even if you're in a non-COVID context, but in particular when firms are experiencing temporary cash flow shocks in other contexts. So that could be due to macroeconomic crises, natural disasters, the temporary loss of a set of customers, or a number of other things. But that's precisely the time when banks often restrict lending to firms, because now that the firm has experienced the shock, it's more risky to lend to that firm. And so that's exactly the time when the SME needs that money in order to be able to maintain their jobs, save those jobs, and weather the shock, and then come out the other side and survive the shock. Whereas if you're in a world where the firms aren't experiencing a cash flow shock, maybe then the loan is not as useful because the firm would have been okay even without the loan.
Thank you. So it's also relevant for SDG 13 in terms of climate shocks as well. This is great to hear. Thank you very much. There's lots of questions for Emma on her research in Uganda. Emma, can we generalize your findings? Is it just for mobile money accounts? What can we learn in other contexts from your research?
Yeah, thank you for the question. So I think though my study specifically used mobile money accounts, that was primarily because mobile money was widely available and widely accessible in Uganda. I think though that the findings from my study would generalize beyond mobile money. It really would just require there to be an account that's in the woman's name that only she can access or has some sort of protection so that only she is able to get to that money. And can be accessed in a digital manner. So I think any type of digital financial account would also work similarly to mobile money.
That's very clear. Thank you so much. So it can be applied in a range of other contexts if you meet those criteria. Fantastic. Camila, what advice do you have for other policymakers who are not as specialized as you in the climate sense, but who are keen to use digital financial services to help achieve SDG 13? Is it more collaboration with the climate team? What advice do you have for other policymakers?
Yes, definitely create synergies. We tend to work on silos, and that doesn't reflect on the work needed to be done. And for example, here you need to partner with both the Ministry of Finance, the Ministry of Education, the Ministry of Environment. And so it's a great ecosystem that we need to promote, and mostly is sort of that coordination that is needed to make sure that we have all of those incentives in place.
Fantastic. It's not easy, but it is definitely, the result is really important for the future of our planet. So I hope all the policymakers listening can be inspired by that example, that we'll take collaboration with all of the players, but it's definitely worth it. So another researcher question for our colleagues in Ghana. How about what's stopping, if you've figured out how to overcome these barriers, what's stopping its expansion?
I'm sorry, can you repeat the question? What's stopping the expansion for what?
Oh, well, you've found out how to use digital financial services to overcome the two barriers to clean and energy use. So how can you expand that?
Well, I guess the right thing to say is that we are finding out whether mobile money and digital finance can help. So we're currently in the process of developing and launching the platform. So, and then we'll be doing tests and hopefully like a larger rollout either in Accra or in central Ghana. And then we'll have better, more solid results to share. What we do have right now is that Ghana is a country with vast use of mobile money, and we believe there is an opportunity to leveraging mobile money to lifting those barriers that we have identified through other research. So we're hopeful that this will be helpful, but it's yet to be tested and put in use.
Great, thanks so much. Thanks for all your questions. And there's clearly, it's been inspiring for everyone to hear all these great examples from policymakers and researchers. We have final word from the UN Secretary General Special Advocate for Inclusive Finance for Development, Her Majesty Queen Maxima of the Netherlands. And she did the foreword to the publication, and she has wants to remind us all that a key priority as we look forward to 2030 is to ensure that financial services build resilience, that these new approaches we've been talking about need to reach the 30% of adults in developing economies who remain unbanked. There's still a big challenge out there in front of us, including a heightened focus on savings and insurance products in the challenges that are being faced, whether it's in the global conflicts and inflation or the cost of living crises. And so in these challenging times, digital financial inclusion provides an important tool to build resilience and realize the shared prosperity envisioned by the SDGs. So that's a great final word. And without further ado, I'd like to thank all of our amazing presenters from Ethiopia, Mexico, Jordan, and India, and our amazing researchers from Ghana and Chile and Uganda. It has been truly inspirational. Thank you so much.